Welcome to The Explainer. Today, we're uncovering the secret strategy that's fueling the insane growth of all those digital banks you see everywhere. And here's a hint, it's not just about a flashy app, it's about earning your business for life.
Okay, so let's kick things off with a bit of a paradox. Neobanks seem to be taking over, right? They've got millions of us signing up, drawn in by these slick, easy-to-use apps. But behind the curtain, they're actually under a ton of pressure.
I mean, you've seen the ads, maybe you've even got one or two of their apps on your phone right now. But have you ever stopped and wondered, how are these companies actually planning to stick around? I mean, the market is incredibly crowded.
The reality is, it's a brutal landscape out there for them. They're in this constant battle with dozens of other competitors. They're spending an absolute fortune just to get new customers in the door. And on top of all that, investors are breathing down their necks to actually start making some real money. And to put a number on that, we're talking upwards of $200 just to get one single person to sign up. Now think about that. When your goal is to grow by millions of users, that math just doesn't add up. It is completely unsustainable.
So clearly, just throwing money at ads isn't the long-term answer. They need a smarter way to play the game. And that's where this key idea comes in, customer lifetime value. You'll probably hear it called CLTV. So what is CLTV? Well, really, it's a total mindset shift. Instead of just focusing on that one-time sign-up, that first click, it's all about looking at the entire relationship they're going to have with you, the customer, over the long haul.
And you know what? The way it's calculated is actually pretty straightforward. It really just boils down to three simple things. How much do you typically use their services? How often do you do it? And, the big one, how many years are you going to stick around?
And here's where it gets really interesting. When you actually run the numbers, a single customer could be worth $1,200, maybe even more, over their lifetime. Now, all of a sudden, spending $200 to get that customer doesn't sound so crazy, does it? It starts to look like a really smart investment.
And check this out. This is why CLTV is an absolute game changer. Just a tiny 5% bump in keeping customers around can literally skyrocket profits by 25 all the way up to 95%. I mean, that is a massive, massive impact.
Okay, so how do they actually do this? Well, this whole idea of CLTV isn't just some theory they talk about in meetings. It translates into a real, concrete playbook for growth that any of these digital banks can use. And it really boils down to this powerful three-step strategy. Step 1, get smart about who you attract in the first place. Step 2, once they're in, keep them super happy and engaged. And step 3, find clever ways to expand and deepen that relationship over time. So let's break that down. First up, smart acquisition. Instead of just blasting ads everywhere, a bank like Revolut gets really nerdy with data to pinpoint people who are likely to be valuable customers. Or you have Chime, which does something brilliant. They give you a bonus for referring a friend. Your happy customers basically become your best marketing team. All right, pillar number 2, deep retention. This is all about making their app so useful you can't imagine life without it. You know, keeping you hooked with personalized features you actually find helpful. Think about things like Monzo's instant alerts every time you spend, or Starling Bank's awesome tools that help you budget without even thinking about it. And that brings us to the third pillar, strategic expansion. This is the long game. Once they've earned your trust, they look for the right moment to offer you more. So if their data shows you're saving for a house, boom, they might intelligently offer you a mortgage product. It's about being helpful, not pushy. And the more of their products you use, the more valuable you both become to each other. Okay, so this all sounds great in theory, right? But the thing is, this is exactly what the biggest players are doing right now. This isn't just a slide deck in a boardroom. It's happening out in the real world. Let's look at a couple of great examples.
So you've got Monzo and Chime. They're both chasing the same goal, but they take totally different roads to get there. Monzo is all about building a community, making you feel like you're part of a movement. Chime, on the other hand, is laser-focused on solving your immediate money headaches, like getting rid of overdraft fees. Two different strategies, but the end game is exactly the same. Drive up that customer lifetime value. So, we've walked through the problem, the solution, and how it's actually working out there. What's the one big idea you should walk away with from all of this? It's this. In today's hyper-competitive world, your loyalty is the new currency. It's the most valuable asset these banks have. The goal isn't just to get you to sign up anymore. No way. The goal is to earn the right to be your main bank for life. And that leaves us with one final question to chew on. As technology like AI gets smarter and starts personalizing everything in our lives, what's next? What will your bank, whether it's digital or traditional, have to do next to truly earn and keep your business for good?